If you've been following my previous analysis on EURUSD, you must have gotten some value. And the last video I made last week about the market insights, what we will be expecting this past week. The last video I made, I spotted this trap, and if you watch that video to the end, it actually happened, because it happened the way I said it, because it was a trap. And if you watch the video, you might have escaped it, because some people were buying from there. But if you saw the video, you must have made a better decision, or decided to wait it out to see what happens when price comes into that area. So this is the market closed yesterday. So this is me reviewing the market again for the new week. So without further ado, I've already shared the monthly, weekly time frame on my previous videos. So let's not make this one to be as long as the previous ones, you get. Let's go straight to the daily time frame, because the weekly time frame and monthly time frame will take months for us to see a significant change, you get. So let's go straight to it. I'm in the daily time frame, by the way, and let me mark out so we will know the trend and when the trend changed. This was the low, this is a high, this was a low, this is a good break of structure, and it took liquidity here. It cleared all this liquidity and it broke structure. This was made a lower low, higher low, then it made a higher high. Then what happened? We broke this strong low, because this is a strong low. This one is a strong low as well. It took liquidity. It induced this place before it broke structure. This one induced this place, took all the liquidity before and tapped into this POI before it broke structure, and it broke this strong low, because it's a strong low because it took liquidity. It broke it, meaning that we have had a change of character. The trend has changed. The trend has changed from here. So this is a low, and we made a high, and we respected the new trend. This is a proof that the trend has changed completely on the daily time frame. You see here, we were making lower low, we were making low high, lower high, higher high. What am I even saying? We are making low high, low high, low high, and then we broke this structure. And let me mark it out. We broke this structure. This was the first BOS we had. Then we respected, price was reacting from this POI, as you can see, and it broke structure again to the downside. So we've known the trend of this daily time frame now. So let's go back to the H4. Let me leave this thing marked till we break again. Let me leave this one marked. So let's check out the 4-hour time frame. and EURUSD. It's loaded. Good. So what can we see in this 4-hour time frame? Let me start here. So we grasp the whole story. So this was a low, this was a high, right? This high made a low, then this was a high, obviously. This was a high, but it didn't break structure. So this was the high, and from here the market started reversing. For those that are paying attention, this was the high, this made a low. This was a high, this made a low. This was a high, this made a low. A high again, and it broke structure. And finally broke this daily time frame high. Because the daily time frame was already bearish. If I go back, you will see that this place will be reacting on the daily time frame POI, which was around here. You see, it was reacting from here, and you see it was bullish. Had it been that the daily was bullish, we would have broken this place. We would have broken here. But because the daily was bearish and this was a valid POI in the daily, it reacted here and we got the break of structure. You see. Then it started continuing the downtrend till we are here now. So now that we've taken the liquidity, because this is a target liquidity. Let me mark it out. This is a target liquidity that has been taken around. It has been broken. So it's time for a reversal for market to either tap into this daily POI or break it and tap into this one before we see the reaction to start selling back, to continuing the daily trend, because we are making decisions based on the daily trend, and all these are internal moves that will lead to that break of structure. This low made this high, this low made this high, it broke structure, made another high, broke structure. See, all these internal moves contributed to the break of structure. So, and now the 4-hour has to be bullish so that it can get to the daily POI before we start seeing sales back to break this zone now. I hope I'm clear enough. Good. Let's continue. This is interesting. So what we are expecting from the internal structure of this 4H4 now will be for price to give us low, high, low, high, low, high. We continue till we get to this place. And if we finally get to this daily POI, then what we'll be expecting is we're expecting a reaction. If we got this type of reaction after the price tapped into the daily POI and made a low here and came back and couldn't break this place and reversed to take this low and come back again, couldn't break this place, we know that this daily POI has held and will finally break this last significant high of the H4. Then we'll know that it's time to go down to break this target liquidity. You get. Hope I'm clear enough. Price hasn't done this yet, but this is what I'm expecting. This is what I'm expecting. If price gets to this POI, because this is a good POI. It's a good POI in my opinion. So let me remove this. So the H4 is bearish, as we can see, and this was the last high of the H4 that led to this low, that led to this low. You get, this was the last high that led to this low. So our target is from this high and this low. You get, that's our range now. So, and we are looking to sell. We are looking to sell when the price gets here. But we won't. We are day traders, as I believe. If we are swing traders, we would have waited for price to get here before we place our sell to come here, right? That's how it's done. We'll be shorting from here to here. If we are swing traders, this is what we are going to do. But since we are day traders, we have to take advantage of what is happening in this internal range. That's where we'll get our setups. In this internal range, we won't wait for a week, 2 weeks, 3 weeks for price to get to the daily and give us what we want. No, that's not what we're looking for. We are looking to take advantage of the internal structure. And from how we can see it now, the internal structure is already reversing. It broke structure. I'll go to the H1 so we can see it clearly. It broke structure. It cleared all this liquidity. And I think this broke structure again. So let's go to the H1 now. Since this POI is already marked out, then the H1. Welcome to the H1. The 1 hour time frame. What can we see happening in the 1 hour time frame? What can we see? I'll start by telling you that this was the last low. This is here I'm starting. This is the high. We got a break. And from here, we made the high here, but we will see it clearly in the 15 minutes or so. Let me start here. We made the high, cleared all this liquidity, induced this place, because this place has to be induced for this high low to be a strong low. Then we made a low and we broke structure, made a high. Then we cleared all this liquidity. I think this was what I marked out on my last video last week, right? Then we tapped into that H4 POI I told you about last week, and if you had bought from the H4 POI, you would have, hit your take profit here. Let's continue though, and now we're already coming back. We're already coming back to make another low and break this zone again, and we'll continue like this if the market doesn't suddenly change till we get here. Then we'll be looking for changes, but if we break it, fine. If we don't, we're looking for changes to start selling. as usual. Yeah, so this is where the magic happens, because I'll be sharing my possible lookout on what is going to happen. Now, from this already, if you've been following me, and you know that this was the last high we'll be looking at, and this was the last low, and it's a strong low because it took liquidity. So our target, let me use the Fibonacci too, so you can see we are looking to buy. So our target will be from this high. No, since we are looking to buy, I'll start from the low. It will be from this high, this low, to this high. This is our range where we are looking to buy or sell from. And the H1 is bullish, the H4 is bearish, the daily is bearish, but the H1 is bullish because it is reversing back to tap into the H4 POI or FVG, daily POI or FVG. That's what it's doing. And the market momentum hasn't been so strong, because if it has been strong enough, we would have gotten to this place already. We would have gotten here already, but it's taking too much time. And so we will try to make money now, because if it's only the strong move, we might not get many opportunities. But since the market is giving us opportunity to trade, we'll have to take it and make the most of it. So this is my Fibonacci tool, and from here I have the 50%. I have the 50%. So from here to here, this blue place, from beginning of this blue to the low, to the 100%, from the beginning of this 50 to the 100%, there are discounted zones where you can buy cheaper and sell higher and make profits. Trading is like normal trading, but yeah, for those that understand. So any POI we get from this POI 50% to 100% is a good POI to sell from, to buy from, because it's a discounted zone. Some people have very long stop loss. I'm not kidding you, and this could be someone's stop loss, and it's not bad. But I can't have this kind of stop loss, because my losses will be as much. So like I said, any POI from this 50% to this 100% is legit. It's a good POI because it's on the discounted zone. But because we are looking to be more precise, not that you can be more precise, because you can't predict the market with so much precision, but we are looking to, have a good risk to reward ratio. We won't just buy from the 50% because it's too high. Imagine this loses. How much do you think you will lose? How many pips is this? So our targets will be from, let me mark out the POIs from this range that I marked out, so we can see. This is a POI, a good POI, by the way, H1 POI, and this is another H1 POI. From these two POI now, which one do you think is stronger? And some people can as well buy from here. target this target liquidity, some other people will buy from here as well, and the same target, of course. And sometimes it's one works, of course, since if you get the trend right, you have like 80% advantage if you are following the trend. Because if you are not following the trend and just buying from any POI you see, then you are just gambling. But if you are following the trend, you have like 80% advantage. So if you buy from here, some people buy from here and target this place, it's still good. And some will buy from here and target this place, it's still good as well. But I always look out for liquidity. Whenever I get a break of structure, I always look out for liquidity and imbalances, inefficiencies left behind. What am I saying? Buying from this first H1 POI is good. It works. But for me to trust the POI more, he has to take liquidity. So that I can trust it more. And this low here, this place, this first H, let me remove this thing. This first H1 POI, this first one here, this first H1 POI, it's a good POI by the way, but it hasn't taken liquidity. So I'm expecting liquidity to be taken. I'm expecting price to induce this place and buy from here before we break here. That's my lookout for the market. Mark this thing out as an inducement waiting to occur. I'm expecting market to come, price to come, tap into this place and give that reaction. This is what I'm expecting. It could tap into here and break it too. It's very possible. But what I'm expecting is for when it taps into this POI, I want is for it to give that reaction. You get, maybe react here or take out this place before it comes back to knock it out, induce this place down before it finally gives us the move. Because this is smart money concept. Why did I say that this place is a liquidity? Because there is so many orders, so many people are waiting to buy from here. That's where the smart money comes in. So many orders are placed here already. So many people will be betting from here. And as a smart trader, the smart money will be waiting to induce these buyers, these early buyers, because they are not wrong. They are not wrong to induce these early buyers before it gives them the move they're looking for. So they will most likely place their order from here. After this first POI has been induced, before it targets this place. See, this is what I'm expecting for the new week. We don't know when it will happen: Tuesday, Wednesday, Thursday, Friday, or if the market keeps doing up and down, it could still go to the next week, because the movement these days are very slow. I will tell you that. So that's my lookout. That's my lookout, by the way. So, and if this place finally gets induced and market taps into here and breaks this place, then this becomes a strong POI. This becomes a strong low because it took liquidity before it moved. You get? I hope this is as clear to you guys as it is to me. As you can see, this was where I was waiting for the market since this previous week, but it never came here. So I'm still waiting, because you know what, the Forex trading is 80% waiting, 90% waiting, and 10% execution. So I'm still waiting, and hopefully this is just my insight, though, not like this must happen. You know, it's my insight, showing you a possible danger and you know, some trades like this, some can place their order from this POI and put their stop loss from this one and target this one. It's still good, but I know I can't risk this much. The stop loss is too much. I can't risk this much, but it can give you a good win rate, you know. So it's still good. Some can as well place their order directly from this low, from this first POI, so that when price induces it and keep their stop loss from here. And you know, this is still very good as well, you know. So it depends on your strategy, your risk tolerance, all that. So this is my scenario, what I'm looking at for this new week. Let me go to the 15-minute time frame. Let's just take a look before we go. So the 15 minutes time frame is looking like this is a liquidity. I'll just focus on this latest data. This video is already long enough. This is a liquidity. You know, expecting price to clear the liquidity, tap into this place and move, but this is still a danger, a very big danger. So I won't encourage you to buy from here, but you can if you want to. I mean, you are not wrong till the market proves you're wrong. I'm not wrong too. I'm not right either till the market proves me right or wrong. So that's it for the new week, and thank you for tuning in once again. I appreciate. And I haven't said this in any of my videos previously, but if you are finding value in my videos, you can always, you know, like and maybe comment or share to your trader friends so that we can reach more people. I mean, it's always encouraging. When I have a personal TikTok account, you know, I don't normally post on social media, but this one is for traders. I'm posting this on my YouTube as well. So this is for, I want to reach only traders. I want to start from scratch. I want it to be only Forex traders that will be here. Yeah, I don't need family. I don't need friends. I want it to be business so that I know that everybody coming in here is coming for the value that I'm sharing here, not because they know me, you know. And so any follower I have is, I'm building it from scratch. I've not shared my page to anyone to follow. I don't even want to do that. I want it to be for people that watch my videos and like the videos, and they followed because they liked the content and what I'm doing. That's the type of people I want here. Not well wishers or something like that, or friends. So thank you. This will be the end of the video.